Welcome to Beginner Trading. Over a 9 EMA pullback strategy. This was actually one of the first strategies I worked with. Um, it's kind of that intro to the pullback strategies. There's a bunch of pullback strategies that you can take. One that I'm going to be going over tonight is the 9 EMA pullback. There's also other strategies that you can use, different EMAs or SMAs. Another uh, common one is one that we already talk about is the VWAP bounce. That's another pullback strategy. And we're just going to go over tonight one that I've actually used and can see it being used in a good way. One of the keys is this is one of the quicker trades out there. If you're one of those traders that you like quick trades, in and out kind of trades, this is that kind of trade. If you're a trader that doesn't like those in and out trades, like trades where you can take more time to develop your trade idea, then this isn't probably going to be one of the best strategies for you. But let's get into the 9 EMA and learn how we can use it to go ahead and take advantage. So one of the keys is the 9 EMA strategy is we're looking for that extension. This is one of my preferred ways of trading pullbacks in this strategy. We're going to look for a stock that's trading parabolic on extremely high volume and then pulls back to the 9 exponential moving average. The goal is to grab the stock on the first or second pullback. The real key is we're trying to get a strategy here where a lot of penny stocks have a tendency of going parabolic or having that big squeeze. We don't want to necessarily chase the stock, but we want to go ahead and have a measured way of coming into a stock that's breaking out. I know that right now the hot stock BPTH, shooting off like that, and a lot of traders are out there wondering how could I have, taken advantage of a move like this? How can I take the extension and measure a pullback so that way I get a good entry and be able to get it on its way back up? So the 9 EMA strategy, one of the strengths that it has is that you can have an ability to measure your risk. I've developed a way that you always are going to know at least where your risk should ultimately be, kind of your maximum risk, and you got to know your reward. This strategy will give you an ability to know that we're going to target the resistance, the nearest resistance. Sometimes that's going to be a closed candle versus the wick of the candle. And then we'll take the wick as the rest of the shares. But one of the keys of this strategy is that it actually buys into the weakness after the squeeze or buying into weakness after a huge move up. If a stock makes a huge move up, we want to be able to measure that pullback, get in, and know where we can measure our risk so that we can have a good risk to reward setup. In the end, that's what we're always looking for. We're looking for better risk to reward, and that's why we use this strategy. So we use a measured pullback here. So you want to have an exact entry point. The entry point is going to be off that 9 EMA. And the strength of this trade is usually it'll be instantly green when it's working. When it's working, you're going to find that you're going to have a great entry. You're going to be near the bottom of the support, and you're going to give yourself a great risk to reward opportunity. And that's really why we do and take this trade, is that the risk to reward is usually very high. And so very high meaning that you can get a great balance. Let's say like 4-1 or even 3-1 is common on these trades because you're getting such a pullback after a parabolic move. All right, guys. The 9 EMA strategy here and finding the pattern. So to find the pattern, what you want to be really looking for is you want to look for stocks to make a high a day breakout or come up on the high a day trade ideas alert scanner. This is why I like trade ideas. When I was a long trader specifically, I use trade ideas more because it really gives you an ability of finding that breakout momentum stock. Our high day momentum scanner will go ahead and locate the stocks that are breaking out with that certain volume that we need. And this is exactly how you find the stock. Now, what are we going to do when we actually get there? And what are we looking for? We're looking for a stock to pull up and look for that 1 minute extension, like 30 or 40 cents. Or with mid cap stocks, we're going to look for like a 60 to 80 cent move. You want to see that good extension happen. It could have been in 2 or 3 candles, but that's if you got there and you're seeing the pattern kind of develop. But a lot of times when we see this 9 EMA strategy, we're going to see a complete breakout candle. One of those big, big candles that extends, and we're going to look for the pullback. The key measure to this strategy is being able to measure what I call your maximum risk point. If you can't measure the maximum risk point, you can't take this trade. Let me repeat that because it's very important for this trade. If you can't measure your maximum risk point in the trade, then you cannot be taking these trades because these are and have a tendency to, when it doesn't work against you, it moves very fast. So if you're not able to know where your maximum risk point is and you don't hold to it, then you're going to quickly go into the red and go red big. You know, not many of these kind of reverse completely to this point, but it can happen. And when it does, the bottom falls out and you have to be quick. So the maximum risk on this strategy is actually going to be the low of the breakout candle. You know, a lot of stocks have like this huge, huge breakout move. Let me get a little pen. We'll get a nice, big, big candle. The real key in understanding the risk is knowing where this big candle is. Where the big candle is, the support right here is going to be your maximum risk. So the stock might have a nice wick and it's going to pull back. We got to understand that if the stock gets below this point, anywhere in this area, we're going to be getting out. And so we know that the volume is built up in this one candle. So this is going to be our maximum risk area. And we're looking to measure where can we get in here, in this area, to take a trade on the upside. You guys kind of understanding the trade right now? I know we haven't gone into an actual trade, but you guys understanding it? All right. So let's understand the entry in this trade. So the entry in this trade is really going to be about first understanding risk to reward. If the trade is viable, we're going to continue. But that's the first thing you need to assess. This is the kind of trade that you have to be really quick with your mind and if you're going to take the trade. So first things first, establish your risk to reward. Know how high that extension candle is. Know how high that extension candle is. Is it 20? Is it 30? Is it 40 cents? Where's the high? And can you, where's your risk? Is it viable? If we get in here and we're risking this amount to gain this amount, is it viable?
Yes.
100% viable, guys. This is the kind of trades that we're looking for. So the real key is just going to be, where can we get in? So the 90 EMA has a tendency of coming in like this, curling whenever there's a huge volume, and kind of signifying where we're going to try to get this stock. Okay. So as the stock makes this extension, the only thing you need to do is measure that risk and look for your 9 EMA. Look for where you think it's going to cross on the next candle. So if this is your 9 EMA, you're going to look to get your entry either directly on the 9 EMA or directly below the 9 EMA. Usually we're going to have the VWAP coming right underneath it in this kind of motion. You know, it could be slightly moving to the higher end, but I use that also to understand that we do have volume behind us. We want the stock to be above VWAP and breaking out on the day. The entry is to get filled on this area right here, the 9 EMA area, with the mentality to place your limit order so that when the stock opens up here and makes that drop, you get an instant fill, and the next candle opens up here and makes that quick run right back up here in this direction. So you're looking to get in on pullbacks, measuring the ultimate risk, putting your limit order out as it approaches. The real key is to, when you get your entry, your mentality needs to be protect your entry. That's the first mentality that you have. You think maximum risk. If this candle comes down through the maximum risk, you get out. But if it opens next candle higher than your entry, that's a great sign. And then when you get the buyers to step up and you see the ask orders go through on the time and sales, that's when you get off of protection mode and you start looking for reward mode. Do you guys understand the entry?
Kind of.
Yeah, I know my drawing here isn't the best.
Shaw had a good question. Does the high include the wick?
Does the high include the wick? That's why I talked a little bit about it earlier. So this is what you want to calculate. So we know that flags, right, have a tendency to have big wicks, right? It's usually not a body closing at the top. So what you want to use is the high of the closing of the explosion, because that's where, geometric wise, that's where the stock's going to make its first move.
Right, and that's right where the wick connects to the body, right?
Exactly, because usually it's going to be like a move where it becomes like this, where the stock actually ends up going to right here and starts creating that geometrical pattern of a flag.
Right.
So that's why we attack this area versus this area. You know, we can keep some shares, but I even like sometimes doing this as a trade that you're actually doing a 1-to-1. You know, these trades can actually be 70% accurate. You just have to trade them correctly. That's the hard part.
Right. These are very similar to, like, I think the 1 minute pullback and how you want to approach these.
It is exactly a 1-minute pullback. That's another pullback strategy that we can use. The real key is this one's just using a 9 EMA to base your entry.
Right, as confirmation. Okay.
As confirmation. And so you're getting more of a specific entry point versus just pull back and buy that candle when it starts holding that low. but we're having a measured specific entry. And the 9 EMA is used by multiple traders. Traders a lot of times use this. And so it has a self fulfilling prophecy in a way.
Right. I think the 9 EMA and the 12 EMA are probably the two most famous moving averages. At least short term, especially short term. 9 and 12 are, those are the ones I've heard a lot about. Those are the ones you hear a lot about as traders.
So profits with this stock. So if we're going to take profits in this is going to be at the first resistance, at that first closed candle. Here, let me take a go back. There you go. So it's going to be at that first candle. So what I recommend is that you take off 3/4 or complete one in, one out kind of trade. A lot of traders look for those kind of trades. Um, we have a lot of trades that we take half and we look for like kind of that big home run move. I think these are the kind of trades where you have to kind of build your bank up. So you want to take that first pullback, get a nice win, and then you can either size up again and take another swing at it, or you take that full in and out and you look for the same kind of entry move again. Because once again, with this trade, you're looking for either the first pullback or the second pullback. Those are your kind of entry points where you want to be getting in.
Right. So, for what we could take from this, so one, it is mostly a scalping strategy, correct?
Yes,
Okay.
correct.
So,
This would be kind of our first real scalping strategy.
right. So, scalping strategy. Uh, so basically, if you've never heard of scalping, that is basically taking very quick trades. You're getting in and out quickly, and that's the goal. You don't want to. This isn't one that you hold, and the reason you don't hold these for very long is because they could very easily come back against you quickly. And so with that, you want to scalp it, get in and out fast, be done. Um,
A
okay.
lot of traders are going to use hotkeys while doing this strategy. Reason being is you don't want to be clicking around. You want to have positions where you can get in a trade by using a hotkey and also get out on a trade. Another key hotkey that you can make is a target, what I call a target hotkey, where you make a hotkey for a certain profit. I used to have 10, 20, and 30 cent profit keys. So it sends out an order, either 10 cents from my entry, 20 cents from my entry, or 30 cents from my entry. These can help you out when a stock just kind of gives you that boom up and you don't have a chance to really measure the resistance to get that exit. So you just quickly put out, let's say if the stock is 35 cents higher, you can put out that 30-cent order and at least you'll get filled with that 30 cents and you get your profit. You're in and out, boom, you got your trade. So I have an example here, at least. I don't know if you guys want to see it before we trade it or if that matters to you guys. Do you guys want to see the trade before we back test it, or would you like me to back test it first and then show you guys the chart? Before,
You want to see it before?
I have no problem. I agree.
Yeah, we can see
Before,
it, and
all
then we
right,
can.
perfect. All right, pulling it in here.
Yeah, that's exactly the weird. That's exactly the one I was looking at. That was from today, though, right?
Yeah, this is just an example from today. I looked at the most recent one and I saw this today while trading on stream today and I called it out in the chat room. You guys can watch the chat and I call it out as it happens. And the reason it works is that I've seen this pattern work consistently. So what we need to do is we need to see a stock that really gets that boom. 3 or 4 candles and you see how the big candle comes here? This is that big candle that I talked to you guys about. This is the candle that we're trying to target. Okay. So we can understand here. Let me move this line here. This is going to be the area that we're actually looking to get.
The body.
So, yeah, the body. So you could put the body closed. 31.10. Okay. So right here, 31.10. So we got to understand first what's going to be our ultimate risk. So on this one, we know that we're going to get a pullback to the 9 EMA. The 9 EMA is actually all the way down to here. So the ultimate risk in this stock is going to be the next support level. We can't use this support because the 9 EMA is below it. So you go to the next support level, which would be here. Sometimes this move right here is going to come in one candle. And that's when this moves a lot cleaner. I can maybe look at the older days to see the breakouts, but let's just stick right here so you guys can understand our entry point. All right, that's going to be our entry point, guys. Let me zoom in a little bit more so you guys can see kind of that first move. Okay, so as you see a stock break out, it's going to come on the high day momentum scanner and it's going to just start shooting out. You're going to see it start breaking out on our high day momentum scanner. I don't know if you want to look it up, John, to see when this stock came up first. And then we're looking for that pullback to the 9 EMA. As long as it keeps going, look for that pullback. The bigger the extension, the better the trade. Those are going to be the A plus ones. Reason why is that we're going to have an ability to base our risk, and it's going to be a tight risk versus a huge reward when it does work. You know, a lot of traders do this trade and kind of get antsy and they take profits too quickly. You got to stick to your risk to reward on this one so that when it goes against you and it ends up dropping through here through this 27, you're gonna take a hit more than your planned risk. You might get a little slippage, but if you give yourself the reward when you do hold it, you're gonna make a huge reward. Nice reward area here up to, if we get in at, let's say 27.63, right there it says the line on this one. On this one it was 27.13. On this one 27.63. So that's what we're going to base our entry on. Either 20.63 or, like I say, directly below it, which would be 60. And our risk is going to be down to, on this one, to 27.15. So if we're risking that much, how much risk is that, guys? 50-cent risk, right? Do you guys see the 50-cent risk? All right, perfect. So the 50-cent risk is from here to this area. All right, let me do a line. I'll do it. There you go. This is going to be our risk area. Okay. Our reward potential is from that 63 all the way up is 27.63 to 31.10. Okay. So we got what we got there. $4 and 47 cents. So that's $4.47 on reward for a 50-cent risk. So we know that right there, we're higher than a 4-to-1 on this risk to return. So that's exactly the trade that we want to target. Big extension, move down, and you're going to look to take 3/4 here or take the whole move off there as it pulls back probably to this area, the 9 EMA, or pulls back to this 28.01 where we can start creating that support on a geometrical pattern, because it could have very easily just done this kind of move. This is the kind of move that you can kind of expect often. Perfect. You want to know how we can use the level two to help with risk and reward? I'll explain this now, and then while I take the live trade, watch as you see the level two and the time in sales, and that's really how we can take advantage. Let me make sure I include the time in sales.
Oh, sorry, bro. I've been muted. I muted myself. Hey, if this one's from today, we can't do the live trade.
All right.
I'm
Well,
sorry. I forgot about that.
yeah. And we'll pull it to an old one. We'll just use it as an example. I'll find another one. It's fine.
Right.
It's just a perfect example, anyways. So
50 cents isn't. It might sound huge relative to like what you usually see me take with a stock like AMD, but on a parabolic mover like BPTH, especially if you're getting what like $4 as your reward
yeah,
target, then
yeah.
it's
This is the kind of trade that in it's you just have to be change your share size. So if I'm gonna risk 50 cents, I'm gonna be at 50 to 100 shares because I can risk $50 on a trade. I've been taking trades actually with higher risk than that right now. So I can maybe even go up to maybe 150.
right,
And so you have to just be, you have to change your ideas because even at let's say 100 shares, that is a $4.40 gain there. So we're talking about a 440 trade, which
right,
is more than fine for a $50 risk.
right,
So when you get that pullback, a lot of times it's going to be crazy. You're going to put this order out there and you're going to see it come down, come down, come down. Boom, you get filled. You're going to see a quick move down. But as you see that quick move down, you're going to see on the level two, big orders pull up on the bid. As those big orders pull up on the bid and go through on the time and sales, it's going to go from a red swing on the time and sales to a green swing. When you see that green swing, you want to see big orders all of a sudden pop through on the ass side. So when you see those big orders pop through on the ass side, that's traders jumping in, hitting the buy button, hitting the hotkey, trying to get into the trade here, probably getting into this at the 50 for the half dollar, jumping in there with size, and then you're going to see the big change and swing from red to green. That's your confirmation, and then you want to see volume confirm it and come in as the stock makes that approach. Do not sell early. That's really the key to this trade. A lot of traders end up selling right here at 29.99, and then they see the stock end up doing this move and they kick themselves in the butt. But really, you need to stick to your plan so that you can get that reward. Let it boom. Up, look, right there. Now we're getting halted. The stock got halted here. So I'm not sure how it's going to react. But you see how the 90 EMA is right there? You see how this seems kind of viable to take a trade here? The 90 EMA is right there at the bottom of that extension. All right, guys. So this is why we take this trade. You're looking to understand the support. You're looking to understand where you can get it on the pullback so that it makes sense. Stocks pull back always. That's just a known fact. The key is how can you measure it? All right. So we're looking for this to open up again. Should open up again at 35, I believe. It opened up 1 minute after. If it keeps going, I'll fast forward it a little bit. It's going to be a 5 minute halt, but you should get a nice down move.
see if it hits you at 21. There you go. 2076. That's actually pretty close. 2076. I
Yep.
would just leave that.
Yep. There you go, guys. You see how it
Uh,
instantly gets there? Instantly, you're kind of in the green and you're in the green big quick. You know your risk is 50. That's all you want to worry about. Is it
right.
going to break 50 on this candle? If it doesn't break 50, I know where I need to sell some. Okay, it hasn't broke 50. Look at the swing of momentum here. From red you're going to see the green just jump in here. Green, green, green. You see the green come in?
Yep.
And you sell 500 of it there. You want to sell 500 as it approaches your resistance there. All right? Go hold, 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 looking to make your add. I took it with 1,000 shares so we could have a little bit of shares left to play with. You could look for your add right back here at 2104, and your risk is going to be your average.
Right. Break even.
Break even on the rest because you've already taken some profit. We're going to look to take 3/4 of the move now. So about 700 of the share at the resistance. So 59 here. Boom. Sorry about that. There's the breakout, and you sell right here on the breakout.
Into strength.
Into strength. There's a reason why we sell into strength here. Still got 100 shares left, and I use that last little 100 to just let it ride.
Right.
I'll break even on the rest. If not, hold to a certain support or resistance. But I want to see this resistance hold right here, this 2360s, and it's going to give me an ability to maximize the gain on the last little bit of shares. So if we all know BPTH kept going, but if you held that last little 100 to this resistance, you can do the same kind of method where this is the bottom and you keep going. Look at that breakout, guys. Look at this money. You get to the point where you have to understand what's the difference between being greedy and kind of being trying to make a good winner. You know, right around here, as I see that real far extension on 2 levels, I could go ahead and I could sell out in this area. Boom, done deal. Beautiful trade. $6,000 trade there, guys. This is really one of the biggest kind of gainers strategies that you can do to kind of break out and make big money, because these trades have high risk to reward. So if this trade only went up to 22, it's not as far of an extension candle. Look for those big extension candles. Those are the A+ trades. Take those. If you only take those when you see this strategy, you'll be in a nice green, because when it does work, you're going to get this big move. When it doesn't, you'll get stopped out. It'll be a small stop out. But I promise you, you play enough of these that extend like this and pull back like this, you will get this extension and you will get on a big stock, a nice runner, and could very much be the next BPTH.
Right.
So one of the key guys is, at the end of the day, a great quote here. You know, I can accept failure. What I can't accept is not trying. And I think this quote is perfect for this kind of trade, is that this is the kind of trade that is for the people that, you know, can have that big risk kind of taking, and that can understand that it's not about risk, because their risk is being measured. As long as I can measure my risk, understand where I'm getting in and out, then I'm taking a controlled trade. I'm not going to accept failure. What I won't accept is not taking the trade, because I know that the 9 EMA strategy works. I know that it pulls back to that level. I know where I can base my risk and get a big reward for a beautiful risk to reward ratio, and prove that profit to loss. And I don't have to be even that accurate if I'm going to get a 4-to-1 or 5-to-1 return. So of course, that's going to be it for tonight, guys. Don't forget, guys, to check out TradeNet's intro package here at the bottom. Click the description and hit the like, subscribe. Beginner trading out.